Microfinance is amongst relatively more riskier segments, given the income profile of the borrower itself is inherently risky or weaker, and there is a huge proportion of cash collection. Apart from that, on the housing side, we see affordable housing as another portion that could come under stress because, again, the lending is to people who come from a weaker strata of the economy. Otherwise, mortgages on the whole should be relatively low-risk asset class during this stress period. Commercial vehicle a bit more vulnerable because they were anyways, again, notwithstanding COVID, seeing some softness with the slowdown on the economy anyways. In terms of retail loans in particular, I think there we have to make a distinction that large-scale job losses or mass unemployment is something which can bring about some stress on the overall books of the retail portfolio. In particular, the unsecured piece or the personal loans piece and the credit cards piece could come under stress if we start to see losses happening. Otherwise, it will depend upon a company-to-company basis. You know, if the exposure of a particular company is more towards the salaried class and the salaried customers also are more from better rated companies, I think then this is a more resilient profit borrow profile as compared to say if it's linked more to the smaller industries and SMEs and more on the unsecured small ticket lending space.
Your ratings outlook call on two private sector banks as well, the Axis Bank and IL&FS Bank. Now, while obviously you have said that HDFC Bank and Kotak Mahindra Bank are better placed, have a stronger asset quality, and are able to withstand this weakness in the operating environment better, are Axis and ICICI at a significant risk, or do you think that they have the capability to manage?
That's a very pertinent question, and I think for us also, that's how we have sort of differentiated between the outlooks. So first of all, if you see, Kotak and HDFC are sort of entering this period from a relative position of strength vis-a-vis Axis and ICICI. So they are, HDFC and Kotak, both largely retail-oriented banks, very less exposure to long-term project financing, and hence the last, corporate blow-up that we saw in the Indian banking sector, these two banks were relatively unscathed. They were performing amongst the best in that peer set, whereas Axis and ICICI saw some weakness. They were, of course, slightly better than their public sector counterparts, but they saw some weakness in their asset quality. So the relative position, again, is very important here. So they are entering on a slightly higher stock of stressed assets as compared to HDFC and Kotak. We do believe that there is a chance that they perform better than the industry in this economic slowdown as well. And we have sort of taken that into account. That's why we've only changed the outlook at this point in time. We do see some pressure, but we do see a possibility that they would be able to manage a slightly better than industry asset quality during this time as well.